We've got some news out of the energy space. As if today weren't busy enough, Brian Sullivan on the phone here with potential details of a deal, Brian.
Yeah, Sarah and Will, thank you very much. Sources confirming to me that ConocoPhillips is the winning bidder for Shell's entire acreage position in West Texas. A deal at about $9.5 to $9.7 billion encompasses their entire position of about 240,000 net acres. The last production update that we had was about 193,000 barrels a day. Remember, we reported this news back in June that Shell was looking to exit Texas production and that Conoco and a few others were indeed poking around. Well, I can confirm that ConocoPhillips is the winning bidder for this. We should get a release any moment now to confirm the deal. And there you go, guys. So on a day where energy fell and we're seeing the price of some of these stocks down, Shell completely leaving Texas onshore production. Remember, they will still have offshore, although their two biggest, by the way, platforms, Mars and Ursa, are still offline due to Hurricane Ida. But this will exit Shell out of the Permian Basin, West Texas, even stretching in to New Mexico, and ConocoPhillips is the winning bidder, paying about $9.5 billion. So a very big oil deal.
And Brian, is this more because Shell want to get out of that region and focus on renewables, or because the region is just less attractive in general than it used to be? I mean, a $9.5 billion price tag, I guess, suggests otherwise.
I think it's C, Will, all the above, right? Because as you know, the European oil majors, the Shells, the BPs, the Totals, the Enels of the world, they are under incredible pressure, far more than their U.S. counterparts, to reduce their carbon footprint as well. We've seen BP basically completely shift almost entirely to go to renewables in terms of new developments, by the way, over the next few decades. Shell shrinking that footprint as well from U.S. production. But to my point earlier, they will maintain an offshore production, at least for now, production capability with their offshore. So this is an onshore deal. These are assets, by the way, that are sort of tucked up nicely into some of ConocoPhillips' other assets. Now, there is a player here with Occidental. There is some joint venture stuff, so there's some things that I do not know about where in terms of production will fall out. Oxy's got kind of a JV stake in some of this stuff as well. But yes, Will, they're reducing their footprint. They're shifting their mix of energy production more. And by the way, I can't tell you what they're going to pay per acre, but given that it's $9.5 billion, 240,000 acres, you can do the math. They're going to be getting a good price, far more than they paid for it as well. We have seen a lot of these rich. This is the Beverly Hills of U.S. oil production, and people are willing to pay up.
Brian, thanks so much.